Hi Rabbi, just a quick video regarding the climactic action we were talking about earlier. Right hand side of the chart, perfect example of climactic action. What do I mean by climactic action is the massive volume here, widespread bar closing in the middle. So we're looking now for a possible change in behavior before we look to see if there's a possible trade here. It's in against the trade trend because we're in a downtrend. But is this a reversal? We don't know at this stage. We're gonna have to watch the charts to see if it gives us an entry to go along. At this stage, if we look at the scanner is showing weakness across pretty much all of the time frames. So we're just looking to see if there's a confirmation entry at this point. So what I would be doing for this is setting a trigger number, which it'll be on the top of that bar, or possibly the top of this bar. So what we want to see is price break the top of this bar, which it has, but it's come back. But we want to see it break the top of this bar, then test in this area. So we want to see a successful test in this area, which will be testing the supply on this bar. So if we see a successful test at this area, then what I'm looking for is a change in behavior in 3 time frames. So what I'll be looking for is green diamonds in the 1, the 5, and the 15 for the time frames that I trade. For you, being a bit of a longer term trader, you're going to look for probably the 4-hour, the hourly, and probably the 15 minutes as to turn green as an entry. So that's pretty much what I mean as a setup and looking for climactic action. That's it on a down bar. So we can see we have what Tom tells us is strength when it appears on a down bar. So we have the ultra high volume, it's closed in the middle. If that was all weakness and all selling and the smart money weren't supporting the market, then that would close on the low. So if we take the chart a little bit further back and look at the principles in the opposite way, we can see on this bar it's the highest volume again for a while. These 2 bars, it's not as high as this volume, but relative to the volume behind it, it's the highest volume for a while. You can see a number of bars on the charts. So we've got very high volume. We've got an ultra wide bar. So for me, again, this is climactic action, because if all this was strength, then it wouldn't be closing where it is. But I'm waiting for confirmation from the next bar. The next bar confirms it, because if all of that was buying, then that certainly wouldn't close in the middle. So again, you're looking for the weakness again to start to appear. So again, what I would do is set a trigger number. So your trigger number's on the top of this bar, but it's on the bottom of this bar. So we're going to come back down and test the supply in this area again. So again, you can see price is mushrooming over. So what I'm looking for is an entry at this point. Once it breaks through my trigger number on the 15-minute, I wouldn't have gotten that entry, or I couldn't see an entry on the 15. So the way I'm trading is I'm dropping down to a 5-minute chart to be able to again to look for that entry. Um, It's going to go back and mark that bar on the 15. So what I've done is I've just marked this bar on the 15, so I can see it more clearly in the 5 minute. So yeah, we can see where this bar's broke the trigger number. Again, for me, I can't see an entry at that point. These are prior to that, so if I was dropping down the time frames, then possibly. But for me, it hasn't broke the trigger number, so I wouldn't have seen an entry in the 5 minute, so I would have dropped down to the minute chart to see if I could have found an entry at that point. And that's really how I trade. And look for my entries. So this is the bar. It's broke the trigger number. It's come back down. It's started to hit some stops. At this point, it's took a little rally on the stops that it's hit. There's my no demand entry. So that would have been my trade at that point there. And pretty much from there, I would have been able to, I would never have taken any heat had I taken a trade at that point. And that literally, from entry, I would have had about a 50 tick move there. I would have, to be honest, I probably would have been stopped out at this point. So, roughly about 30, 40, 30, 25, 30 ticks. If I'm honest, I would have stayed in the trade all of the way up until this point. Then I would have started bringing my stop, locking some profit in at this point, and then as I see these signs of strength coming into the market, which you can see here, you can see some volume coming into the market, coming up is potential climactic action. So what I'm looking for there is then to just bring my stop in as low as I can, and then once price come back again, which it did, I probably would have been stopped out in that area. So that's pretty much how I trade. If I can see the weakness in the higher time frames. So you're looking for the weakness in the higher time frames. It's this bar that's highlighted. So you can see that obviously for me there isn't an entry at that point. So I'm just dropping down the time frames until something sticks out for me, until I see something that where I can find an entry. I couldn't, like we saw earlier, I couldn't see it on the 15. I didn't have a VSA principle to get in on the 15. It didn't come on the 5, so I was just working my way through the time frames until the the VSA principle for me comes up, and it wasn't until the 1 minute chart that I would have actually getting my entry at that point. If I can, which would have been this bar. So that would have been my confirmed entry for a a nice 25, 30 pip move. Um, but if you see those principles in the higher time frame, then by all means, you can trade the higher time frames, but you have to see the principles. That's paramount, principles first. So we need to see the ultra high volume. So if you were trading the hourly, um, then you're look you have to go back through the charts yourself to look and see where entries would have been possible on the hourly. I mean, there is the signs of weakness coming in. There's supply there. There's supply there. Two bar reversal, which is another strong signal. So if your trigger number set at this point, you're just looking for something to get you into that trade. Um, for me, in the certainly in the hourly chart, it it would have been it wouldn't have been easy for me to take a position at that point, because it doesn't fit in with my style of trading. But your style of trading could be, as soon as it breaks the trigger number, then that can be your entry. How many times does it do that? It seems to do it quite often. So you have another setup here. Just a little bit further back. Here's the widespread bar showing the weakness. Trigger numbers on that. You're just waiting for it to break your trigger number again, to mushroom over, break the bottom of that bar, and then off you go for a run to nearly 100 ticks, over 100 pips at that point. So what the point I'm making is you have to be able to come up with your own strategy, based on VSA, and what you know and what you believe. So how that works is you're literally going to go back through the charts. This is how I learned, back through the charts, then let's look for look for decent setups, you know and find something. I mean, this, because it's the 30 minute. I was going to say it's a bit choppy in there at the moment. So let's have a look at the hourly chart and see if we can possibly find any weakness. So we can see here we have an ultra high volume bar, climactic action. We can see that it wasn't all strength in that bar, because the next bar collapsed. We've got a very strong two bar reversal. Price comes back through, testing the supply, hitting some stops. little bit of a rally again. For me, it's still I would still want to see the principle. Here's the principle: no demand, bang, market comes off for 150 pips. You had another entry at this point, an up thrust. You had another entry at this point, another up thrust. We see supply. We have another no demand bar at this point, or it looks like a no demand bar. Yep, sure enough, no demand. Price comes off about 70 pips. So again, these are the principles that you're looking for. If we if we stop the chart at this point, just gonna keep removing these lines so I don't confuse you. So we stop the chart at this point. Again, we have weakness in the background. We have this ultra high volume bar. Again, confirming there's weakness on the following bar. The market doesn't like ultra high volume, so again, you can see if it was all strength, then these bars wouldn't be there wouldn't be narrow spread. You wouldn't be the market's trying to push up at this point, but look at volume's reducing, so there's no interest here in the volume. Doesn't show any interest in higher prices, so you can see that the market starts to come off. So again, if you trigger number set your trigger number for that point, you wouldn't really have had much of a move on that one, to be perfectly honest. But it depends on how aggressive you are in the market. Um, you know, my trigger number is always on the bottom of the bar. Gavin sets his sometimes on the close of the bar or the middle of the bar. It just depends on your preference. But for me, that would have been on the bottom of the bar. So mine would have been post on the bottom of that bar. It didn't break. It went higher, and it took a while to roll over. But I had a second bite of the same move, which is this bar here, which is identical widespread bar. Closing in the middle, we can see the weakness again coming over. If you wanted to be aggressive, there's your no demand bar. But like I say, for me, I wait for the trigger number to be broken. So the trigger number's broken at this point. I'm waiting for a no demand bar. Do I get it here? I get supply coming in. For me, I would probably drop down the time frames, like I said before. At this point, it's broke the trigger number at this point, so I would be dropping down the time frames as soon as it's broke my trigger number to see if I could get an entry. So let's look at the 15. Find where my line was. So just halting the video there a bit, Rabbi, just until I found the exact entry on the 15 minute. So we can see the line, the line which is drew from my hourly chart. It's broke my trigger numbers. There's the no demand bars. So I would have had an entry on the 15 had it decided to trade that at that point. I think we're looking at something about 180 pips there on that particular move, which would have took us to this point. Would have kept profit locked in. Should I have been able to stay in the market at that point. Obviously, this means holding positions overnight, for me, which is something I don't tend to do. So I would have probably taken, I would have gotten a little 60 ticks at that point. Would that be a fair assumption? And rode my stop loss down to this point, and then the market would have come back on me and probably stop me out at that point. But somebody who was taking a longer term position, with a bit of a wider stop, could have taken that. You would have taken a bit of heat at this point had you getting in here. But depending on how where your stop was, you could have still rode that out, or you've got another entry at this point, supply coming in. We wouldn't, to be fair, we wouldn't have known about this bar, this trap up move bar. Potentially that's on a news event, so it would be difficult for me to comment on that at this stage. So I hope that demonstrates, what I'm talking about. If it doesn't make any sense, then by all means send me some more questions, and I'll be able to answer them. And just keep sending you little videos like this, and hopefully at some point it'll start to make sense. But just to clarify, climactic action, ultra high volume bar, widespread bar, closing in the middle. In a On a down bar, it's a sign of strength. If we look for on an up bar, if I can find an example straight away, so I'm trying to keep these videos short for you. Ultra high volume, widespread bar, closing in the middle, that is climactic action. Potential climactic action, potential buying climactic action, market starts to come off. Hope that makes a little bit of sense to you. If you need anything else, as always, just drop me a quick question in the chat box, on Messenger, or send me an email, and then we'll do another video. But I'll keep if you keep watching them, you keep sending me questions. So if you watch this today, send me a question tomorrow, or send me a question today, and I'll do another video tomorrow for you, based on your questions. So I hope that helps, and I hope it speeds up your analysis and being able to trade the markets. Speak to you soon, Ravi. Take care. Bye bye.